Now, one of the great debates of investing is whether to do it yourself or to hire a professional. What are the pros and cons of each? Let's ask Eddie Gabor, Managing Partner, Key Advisors Group. Eddie, we want you to be fair and impartial here. You know, do you have an advisor? Should you do it yourself? What do you advise people? Because they want to go for the long term and they want to preserve their cash and make more money.
No, absolutely. And look, there are certain groups of people that are able to do it and do it efficiently. And obviously, managing your own money, you're going to save quite a bit of money in fees. And when you compound that out over 20 plus years, that's a lot of money in your pocket. What we have found is most people don't feel comfortable, especially later in life when decisions that they make or don't make can be crucial in retirement. They don't want that responsibility on their shoulders because, look, it's not an easy thing to do. It's a full-time job. So if you can dedicate hours, I know I spend 50, 60 hours a week working for our clients. And if someone can devote many hours per week in doing that themselves, then sure. I've always been a big believer in having someone, a coach, a financial coach, to keep you grounded and keep you from making emotional decisions. I'm sure many people.
Right. So, I mean, that's the other thing. Fees and emotional. Those are the two things. Fees and emotional. And, you know, you're in your notes, you actually said having a pro can sometimes save you that emotional trade that would have cost you more than the fees. I don't know.
Well, let's look at what we just went through. I'm sure there's lots of do-it-yourself investors that maybe panicked and sold at the market bottoms or close to it in March and missed a 30% upswing. Out of our entire client base, we only had 2 clients that really panicked and made that emotional decision, even with us trying to coach them through it. So the majority of our clients, in our opinion, are sitting pretty good right now, considering having us helping them navigate through this market. And this market's only going to get more and more challenging.
Right. And so what are these pro teams telling investors for the long term right now?
Well, look, you've got 2 dynamics happening right now. This is probably the biggest disconnect in history when you look at the Wall Street and you look at Main Street. We've taken a pretty defensive position right now for clients. We have increased cash for them. We work with mainly retirees. So right now, overall, we're underweight equities. We have about a 10 to 20% cash position, depending upon the client's situation, because we think that this 10% moves you're seeing in the markets are going to continue because this virus is here to stay this year. And unfortunately, there's going to be more damage done economically. So we feel like you can buy the dips, but we think you need to have cash as an allocation tool to be able to buy those.
Right. I mean, you're underweight equities. You didn't want to miss coming off the bottom because the Nasdaq's not too far off its all-time highs. You know, we're well over 20% from the bottoms for all the major averages. I mean, depending whichever one you want to pick, we're up off of those. So you didn't say sell down there. I mean, because then you really lost your money if you sold down there. You kept some equity, and now you're just sitting with the cash and waiting for some pullbacks to put it back to work.
Yes, I think anyone that's retired right now or close to retiring, if they're all in equities right now, it's my opinion that that's just too big of a gamble with all the uncertainty out there. Second quarter numbers are probably going to be the worst that we've seen in a very, very long time in regards to earnings. And then we have to worry about the fourth quarter when this virus rears its ugly head again, what type of effects it's going to have economically. So there's certain sectors economically that so much damage is done, it's going to take years for them to get back. So it's going to be a very choppy road.
Yeah, choppy. We were down 390 points today, right? Yesterday we were up 1,000 at one point. All right, Eddie Gabor, thank you so much. Managing Partner, Key Advisors, thank you, Key Advisors Group.